18.
Dr. Sen, isn't the nominal GDP much more dependent on WPI? I mean, the deflator more dependent on WPI than CPI?
It's about 60% depends on WPI and about a little under 40%
Okay.
is on CPI. So
And
the real question, I think Devendra is right, that the WPI trajectory is very weak, but CPI continues to be up there. And so much is going to depend on what's going to happen to agri prices.
Okay. But
which has really been driving the volatility.
Okay. So do you think that, WPI could go down to very low single digits, maybe 1% and 2%? And therefore, what should the assumption be? Should the government go with a 10% or a 9% assumption, as low as that for next year?
Well, again, let's look at it. If WPI is hanging around somewhere, let's say between 2.5%, I don't see CPI coming down to anywhere below 5%. So if you take a sort of a weighted average of that, what you are getting is about 3.5%. So 3.5% plus 6%. So you're talking about 9.5%. Stretch it a bit, 10%.
Okay. So if the government were to assume anything more than that, then it would be a little something that the street may not take very kindly to. Abhishek, what would you say should be the nominal GDP assumption for the budget?
Well, we are working with assumption of 10% growth next year. I agree with other panelists that the risk to this number would be towards a lower estimate. We need to recognize that while real GDP growth is trending comfortably below the pre-pandemic trend line, that is not the case with nominal GDP growth because commodity prices have been higher, WPI inflation was high, and nominal GDP growth has been very strong. So there is that base effect which will play a role, and actually commodity prices are also softening. So the double whammy of that will have some impact on nominal numbers. So I agree. I mean, the challenge next year is to achieve fiscal consolidation despite perhaps limited tailwind from the revenue side. But there is scope to do that because currently tax revenues are anyways above pre-COVID levels. It is the expenditure levels which are much, much above what was the case pre-COVID. So it is expenditure retrenchment which needs to drive any fiscal consolidation next year rather than higher revenues.
What is a good tax assumption for next year? Should it be 10%, Abhishek?
Yeah, I mean, so typically you assume very close to nominal GDP growth. Indirect tax especially will move very closely. On the direct tax front, of course, I mean, theoretically, you would think there is, mixed relationship because input price pressures will ease. That should help corporate margins. Therefore, so direct taxes, will still move in line with indirect taxes, but yeah, clearly lower nominal growth will have a bearing on indirect tax collections and overall tax collections.
Okay. Dr. Sen, what in your estimate would be a good tax assumption? And will the government have a problem trying to reduce the fiscal deficit because the nominal GDP and the tax assumption cannot be very high?
Lata, it's the overall level of GDP certainly is important of growth. But what is also equally important is its composition. And if the assumption that is being made is that the current balance between the different sectors remain, then what Abhishek said is roughly right. But if, on the other hand, we expect the MSME sector to actually lead the growth process going forward, then your tax collection may be significantly lower, simply because the extent of tax compliance among the MSMEs is lower than that of corporates.
But why would you make the assumption that the MSMEs will suddenly do better?
No, I'm hoping they will.
Okay.
I'm not making the assumption.
Okay. But
at the moment, we're all making the assumption that the corporate-led recovery is going to continue.
Okay. So you would say...
Which does not bode well for employment.
Oh, yes. I take your point on that one would want it to be labor-led and therefore MSME-led. But all we have is now a nominal GDP number for the current year, which is 273 trillion rupees. So, Dr. Sen, what would your best guess be, or what should be the right guess in terms of the nominal GDP for next year? Should the government run with 300 trillion? You would think that's a fair assumption. And therefore, over 300 trillion, what should the tax assumption be?
I would go with around 300 trillion, with a tax assumption of being a shade below the 10% nominal growth we are talking about. I would say you should have a tax assumption of somewhere around 9.5.
Why should it be even less than the nominal GDP growth assumption?
Because that's what usually happens in normal circumstances. What we've seen in the last couple of years is actually somewhat extraordinary.
Oh, okay. So you think that impact will wear away, and we have to run with perhaps a lower tax assumption. Would you say that a good budget would be one that cuts the fiscal deficit? The government's stated target is to reach 4.5% by FY26. So logically, it should be at least a 60 to 70 basis point lower fiscal deficit, and that would mean 5.8% at least. For the FY24, for the coming year. Is that what you want them to do? Would that be the ideal budget?
As of now, yes. I mean, somewhere around 5.8 would be, I think, the right target going forward.
Oh.
And as you rightly said, most of this will have to come from curtailing expenditures.
Okay. Go ahead, sir.
They shouldn't assume, large growths in taxes. Just to make the budget balance.
Okay, so that works out to, I think, about a 17.5 lakh crore of fiscal deficit. Anything more than that would be taken badly by the market, you think, Abhishek?
Yeah, so market is, there is quite a bit of consensus that fiscal deficit should be around 5.8, 5.9% of GDP. Government has already communicated that over 3-year time frame they want to reduce overall deficit by about 1.9%. So you would expect 0.6% roughly each year. And given fiscal deficit is so high right now, and there is a lot of scope for expenditure retrenchment, particularly on the unproductive expenditure components, at least about 0.6% should be par for the course. Anything higher will definitely be concerned, but I don't see much upside risk. If fiscal deficit this year is for some reason below 6.4%, then you could get a fiscal deficit number which is perhaps a little lower than 5.8 rather than higher. So higher number will certainly be a negative because overall gross borrowing number this year will be next fiscal will be higher than this year. And we are not anticipating much by way of monetary policy easing RBI. So lower fiscal deficit will be good. But there is limited uncertainty this time around what that deficit number will be.
So 17.5 lakh is what you would go with?
Yes, somewhere there, yes.
Okay, somewhere there, yeah. Dr. Sen, final thoughts. Do you think 7% is legit? You think the advanced GDP numbers are not throwing any surprises?
No big surprises except for agriculture. All of us have a hard time believing that the agricultural sector is growing at 3.5%.
Okay, you think it would be much worse?
It should be worse. From all the accounts that the government itself has released, it comes as a surprise.
Okay. Well, I did get assumptions higher than that also from the street, so we'll have to wait and see. Actually, it is manufacturing where the assumption is higher than what our poll threw up. But overall, all of you are in agreement that the assumption is in line with what all of you were estimating. Thank you very much, Dr. Sen, Dr. Pant and Abhishek for joining me and making sense of these numbers. The numbers largely in line. The government should assume a 300 trillion GDP next year. And we will have to see what kind of tax assumptions and fiscal deficit assumptions come in. But the fiscal deficit wriggle room definitely will be less next year because the nominal GDP growth is expected to be much lower because of a lower inflation number. With that, we wrap up this special broadcast on the state of the economy and the advanced GDP numbers. Thank you very much for watching. More news and highlights are lined up for you.
राशि की